Is bombing Iran is going to make Iran great again? That's a big question, a bit hard to answer now, but clearly the geopolitical landscape is still very, very confused as we speak. What are the big lessons to be drawn from here? Well, we don't know yet what could be the outcome. Clearly, Israel wants a more pacific regime in Iran. Remember that Iran wanted to destroy Israel with a nuclear bomb. What we don't know yet is if the US, for the first time, they bombed Iran. Do they want to change the regime, or they just want to destroy and stay here regarding the nuclear facilities in Iran? Everything is open. What is the potential outcome? Well, we still can have a change of regime, and obviously, if we have a more peaceful Iran, that's all the better for the region. What could be the outcome from now if we don't have a change of regime? Obviously, that will be very, very impactful for commodity prices. Our central scenario is that we are not going to see a huge impact because we don't expect the Strait of Hormuz to be blocked by Iran. Never ever they have done that because that's their only source of revenue. We have 1.7 million barrels a day of oil going out of Hormuz from Iran. The bulk of it goes to China. 69% of traffic goes to Asia. We have the great opportunity to have Joel Hancock, our oil and gas analyst. So long story short, what matters the most in this story is what could be happening to the Strait of Hormuz and its impact on oil and gas prices. Let's hear about Joel Hancock's views on that.
As news broke that the US had attacked 3 nuclear facilities in Iran over the weekend, the market was anticipating the oil market open, expecting a significant price rally. Whilst we did see Brent up $4 intraday, since that point, we have seen, at the time of recording, Brent even trading lower than the Friday close. So how can we explain these pricing dynamics? Well, broadly, geopolitical risk will only lead to a lasting price increase if we see sustained risk to oil production and oil flows. Now, at the time of recording, the market is really assessing the probability of a significant disruption to those flows is relatively low. We agree with that assessment. So Iran ultimately wants to keep the US out of this conflict. And to our view, the US will only get involved if Iran does kind of make a move towards closing the Straits of Hormuz or attacks oil facilities in the region. If Iran effectively restrains its response or continues to attack Israel unilaterally, effectively we will see the US keeping out of the broader conflict. With that in mind, we do believe that the wider risk to regional oil production and flows and the free transit of oil tankers through Hormuz to be relatively low. And that's ultimately explaining the price move that we see so far. So broadly, where do we see oil pricing? Well, we do think the market will retain a degree of risk premium, given the risk of miscalculation or escalation, even if this does remain just a bilateral Israel-Iran conflict. However, we don't think that we will see any sustained outage to production, either Iranian or otherwise, and therefore we think the negative fundamental impulse that we're expecting of the second half of 2025 will reassert and dominate pricing dynamics. So we see Brent at around $62 per barrel average for Q4, and that brings us to around $68 for 2025 on average for the year.